What if I told you that over $1 billion just poured into water tech in a single year and for the first time ever, but 84% of investors will never return?
Where did they go?
Having tracked every single water tech investment in the past 7 years, I've spotted a pattern. Out of 1,489 investors, only 250 ever cut a second check. And yet, something's different in 2024. Why did 303 investors suddenly jump in this year alone? What pushed America's share of global water tech investments from 55% to 47%? And most tellingly, what's causing certain water tech categories to command triple the average deal size? Let's break down the 7 trends that could reshape water tech investment based on what happened in 2024. If you're new here, my name is Antoine, I'm a water engineer, and this one is a massive update to last year's video where I reviewed 415 water tech investment deals that closed between 2018 and 2023. I'm linking you that other one in the description, but I specifically strived to not repeat myself, so you may want to watch it once we're done today. Simple advice, and it supports my work, to be honest. But without further ado, let's start with the billion-dollar wave. 2023 was a record year for water tech with $861 million invested, beating 2021's previous record of $756 billion. But that record didn't last long, as 2024 just took it to a whole new height of $1.12 billion, breaking the symbolic yet meaningful, I believe, billion-dollar mark. By the numbers, that's a 29% increase in volume, while it also comes with a steep growth in the number of deals, with 41 more compared to 2023, which represents a 34% increase. Now, all that being said, it's not just unicorns and rainbows either. Water tech doesn't exist in a vacuum and somewhat belongs to the greater cleantech ecosystem. We're still too early in 2025 to have a consolidated view of 2024 for cleantech, so I'll have to lean on 2023, but in that not-so-distant past, cleantech companies raised a record-breaking $468 billion. So if I now place water tech's $1.12 billion in that larger $468 billion context, that means that just a little more than 0.2% of cleantech's money flows to water endeavors. Why so? If so, how so are questions for another day. Still, it's worth mentioning. Growth stage water tech investment is growing high-level double digits, but as cleantech investment grows mid-level triple digits, the gap keeps widening. But that context given on the macro stage, it's time to zoom into water tech as a category to reveal the finer flows in money streams and especially the 4 hidden champions. Now, before we go to the champions, let's define what we're discussing here. I've taken all the deals since 2018 and clustered them into 6 categories: treatment technologies, digital solutions, decentralized systems, smart agriculture, resource recovery, and environmental services. Pretty logically, software is an investor's darling, right? The most popular category here is digital solutions, with 261 deals since 2018, but also the leading spot for 2024 alone with 39 deals, just a nose ahead of treatment technologies and its 38 deals. Meanwhile, environmental services is the least funded category with only 49 deals since 2018, but a steep increase over 2023 and 2024 under the rise of PFAS remediation and water body cleanup. But those are the number of deals. What about the size? Well, all in all, mixing apples, oranges, and tomatoes, or said differently, seed, Series B or Series E, so really all in all, the average deal in growth stage water tech is $6 million. That number in itself doesn't mean much because I'm mixing apples, oranges, and tomatoes, but it gets interesting when we use it to compare the 6 categories one to another. Indeed, treatment technologies, environmental services, and decentralized systems are all more or less on the average, so between $6.1 and $6.5 million for the typical round. Smart agriculture is just a notch higher with $7 million, while resource recovery trumps them all with $9.5 million for a single average round. In 2024, that average even rises to $11.3 million, or said differently, roughly twice as much as in any other category last year. But that also means that on the other end of the spectrum, a digital solutions round only raises an average of slightly less than $4 million. So if you're in digital solutions, you seem to have better chances to raise, but when you do, you'll raise less. Now, those are still not my 4 hidden champions because I went one step further in granularity by creating 4 subcategories for each category. I won't list them all here for the sake of clarity, don't worry, but I also created a PDF with my key findings which you'll be able to download from the description. It's all detailed in there, it's fully free. I'm not asking for your email, I wouldn't know what to do with it, honestly. But if this kind of information is of interest to you, consider subscribing to this channel for more. I'll wait. Click the button. Okay, let me continue. Within those subcategories, we have 4 sexy niches, starting with number 4, crop management within smart agriculture, that will attract an average investment round of $10.5 million. That's pretty close to chemical and biological treatment within, you would have guessed, treatment technologies that receives 11 million rounds, not so far behind what I've always coined the water VC darling, atmospheric water generation, which is a subcategory of decentralized systems that attracts on average $11.4 million rounds. But wait a minute, if the VC's darling is number 2, then who's the new darling? Well, it's a subcategory of resource recovery. It could have been nutrient recovery, that's actually number 5 in this top with 9.4 million, but it's another one, it's metals and minerals extraction, that attracts on average $14.2 million rounds. Now, interestingly, that subcategory is not really driven by outliers because even in a year like this year, where Lilac Solutions raised a $145 million Series C, while the average 2024 round is slightly under the overall average with 14 million, which still makes it the year's number 2, just behind crop management and its 16.2 million average round. So we've seen the categories and the subcategories. Let's now have a quick look at the companies that made history in 2024, starting with the one I already name-dropped, Lilac Solutions. Their $145 million Series C directly enters the top 3 of the largest water tech raises, just behind their 2021 $150 million Series B, and of course the record holder Gradient Series D. We have another new entrant in the top 10 with Svitterko's $58 million Series B that becomes the 9th largest round of all times, while we also have 5 new entries in the top 20 with Elicit on rank 12, B Water on rank 13, 120 Water on rank 16, and Avnos on rank 20. This moderate number of big moves actually also highlights how the average ticket stabilized around the 6 million mark I already mentioned, and this ever since it jumped from 4 to 6 in 2021. But now that we have a better understanding of the companies, categories, and subcategories where investors put their money, it's time to offer them, and maybe you, a mirror and to look into the new money rush and the players it carries along. So, I tracked 158 deals in 2024, but as 89 of these deals had more than one investor, we ended up with a total of 383 different investors that cut a check to a water tech company last year. Out of these 383, 303 cut their first check ever in 2024. So, we indeed have 79% of newcomers last year alone. That's a lot, but it's actually below average. I already told you in the introduction, just to check who's following me through this number maze, despite my French accent, sorry about that. But since 2018, 1,489 investors cut a check in water tech, out of which 250 did it more than once, which also means that 84% of investors put some chips on water once and never come back.
They were here, but now they're gone. Like a lot of people these days.
Now, for you to shine at your next dinner in town, I looked up those newcomers in hope for some star power, and I found some as Reed Hastings, the founder and former CEO of Netflix, invested in Sun Culture's $27.5 million Series B to further deploy their solar-powered water pumps to small-scale farmers in Africa. He wasn't the only star in that round, as Eric Schmidt, the former CEO of Google, invested along. Again, there's a pattern in the type of company the Silicon Valley moguls back, but that's a story for another day. I have to fight to keep myself on track. So here you have your 2024 anecdotes. Let's now look at the most active water investors of the year. And this year, the top 5 is a top 6, as 4 players are tied third: Emerald, Echo River Capital, SQM, and Our Crowd with 3 deals each. I've highlighted Emerald and Echo River Capital last year, so let's look at the 2 others. Our Crowd is a special animal, if I may say so, as they act as a distributed VC. It's an investing platform that does a vetting of early-stage tech companies for individual businesses and funds to then cluster their small tickets into a larger pool in a kind of crowdfunding for professional investors. As Our Crowd is headquartered out of Israel, they pretty logically have a track record of investing in Israeli companies, and their 2024 water activity is no exception, as they backed Can-Do, and Blue Green Water Technologies twice. For SQM, it's the most active corporate on that ladder, continuing to bet on both DLE and water plays, but I won't repeat myself here either. If you want to dig further into that, you can check my interview with Salinity Solutions, one of their portfolio companies, or my recent deep dive into the water impact of lithium mining. So let's move to the top 2, and that's where we find the usual suspects with number 2, PureTerra Ventures and its 4 deals, and number 1, of course, Burnt Island Ventures with 7 deals. Overall, and since 2018, the top 3 stays the same. Number 3, Emerald Technology Ventures with 11 deals. Number 2, PureTerra Ventures with 12 deals. And number 1, Burnt Island Ventures with 26 deals. That's for the number of deals. Now let's look at the size. Who invested the most in 2024? Well, I need to do my disclaimer. To provide you with that information, I needed to do guesstimates as to who invests what in a round with multiple investors, so take it more as a subjective figure. Number 5 is, again, a kind of special animal. It's InvestNL, who backed 2 companies this year, PAC and Hydraloop. I say special because InvestNL is a Dutch state-owned impact investment company that's meant to support entrepreneurs and ventures that are typically considered too risky or require patient capital, and I quote. I find it interesting, and trust me, I'm working hard to prevent myself from going off on a sidetrack, but PAC's production of biopolymer from wastewater or Hydraloop's decentralized recycling of grey water are sure ambitious endeavors, but is it too risky? I hope not. It works, it's the right thing to do. What's risky in that? Don't take me wrong, I'm not blaming InvestNL by any stretch of the imagination. I just find it revealing of the level of teaching that we, the water people, still have to do to bring across how most of what we do is an entrepreneurial adventure and too often an uphill battle. But it's not rocket science. And I closed the sidetrack, sorry for that. I had great off-the-record conversations with InvestNL last year, so really only kudos and support on my end, and a glorious 5th place in my ranking of who spent the most this year. Number 4 in my list, Carbon Equity Partners, whom I estimate contributed a bit more than $19 million to Elicit Plans Series B. Rank 3 goes to Mercuria, who led Lilac Solutions Series C for probably around $26 million. On the second spot, we have Edison Partners, who I estimate contributed about $28 million to 120 Waters' $43 million round. And finally, the top spot, the informal trophy of the company that spent the most on water tech in 2024, goes to Halliburton Labs, through 2 checks they cut to SPQ and Xrelit. Halliburton Labs is actually again a special animal, as they are an accelerator and a platform dedicating to clean energy and climate ventures, which reflects in the profile of water companies they backed, a mineral recovery play from brine with SPQ, and a direct lithium extraction ion exchanger company with Xrelit. These 2 tickets don't enable Halliburton to enter the top 10 of all times, as they now sit on rank 12. The only move in the top is Breakthrough Energy Ventures, climbing on the second step of the podium, thanks to their continued investment in Lilac Solutions this year and their 7 water investments since 2018. But now that we know our investors a bit better, let's look at the geography of these deals as America's grip loosens, and I'll promise I'll speed up a bit. Here I didn't look at where the money came from, but at where it went. So geographically speaking, where are the growth stage water tech companies that receive those investments? When I say that America's grip loosens, we need to establish some context first. Since 2018, 55% of water investments went to the US, so of course starting there, even if it goes down, it's still going to be massive, don't take me wrong. In 2024, only 47% of investments went to US companies, obviously still making it the year's number 1. But the match was much more contested for the second rank, with France winning by a nose and receiving 7.6% of water tech investments against 7.5% for the UK. Sorry. Good game.
The French bastard!
In the 2 last spots of the top 5, we find Israel and the Netherlands with respectively 5.5% and 5% of the money. But I'd say more interestingly, there's a new entrant in 2024 at the bottom of the top 10 with Kenya. That's the highest ranked non-OECD country in the list, and by a lot. which could be a sign that investors start to believe in Africa as a promising water market, and if so, I would believe they're right. Finally, if we zoom out from 2024 to look at the last 7 years, as I said, the US sits largely on top with 55% of the investments, followed by Canada with 6.5%, Israel with 6.4%, the UK with 5.5%, and France with 5.3%. But let me keep my promise to speed up a bit, and let's move to number 5, the real price tags. This is where I have to tell you for the second time to take my words with a pinch of salt, because my dataset is a bit less exhaustive here than it was otherwise. But I wanted to get an idea of a typical round size for every step from pre-seed to Series D. Not everyone discloses the amount they raise, and not everyone discloses the round they're in, which makes me assume or skip quite some deals here. And finally, the ranking by letters is up to the personal taste of every entrepreneur.
Are you done?
That disclaimer made, a pre-seed in water tech raises about $1 million on average, a seed raises $3.5 million, a Series A about $9.2 million, a Series B $22.6 million, a Series C $44.6 million, and a Series D $105 million. Compared to broader climate tech, that's a much smaller seed size, but seed is also a stage where many water tech companies still rely on different types of fundings, mostly non-dilutive. Series A would be on par with the greater market, while later rounds seem larger in water tech. That's where you shall use the pinch of salt. The water tech sample is not really representative, and I suspect companies like Lilac, Source, or Gradient to substantially move the needle upwards. Now I promise I'll work on the fine-tuning of this indicator, and I'll update you maybe next year with something more tangible and accurate. Probably a good reason to subscribe if I were you, right?
Wow, you said it twice.
I know I keep begging, but that was a lot of work over the holiday, and you're receiving all that information for free, so I feel entitled. But it's maybe time now to look at the other end of the pipe and ask, where are the exits? Indeed, there was no very spectacular exit this year. At least on my watch. You can always call me out and tell me if I missed one. Realtek was acquired by ABB, E2 Metrics was acquired by Ovivo, and Aqua also was acquired by Growers Edge. Somewhat out of bankruptcy, which reminds me to remind you that I have a deep dive on UV LED disinfection in my bucket list. Let me know in the comments if you'd really like me to prioritize this one, because the graveyard is telling. But meanwhile, on the IPO end, Concord and Virus Systems went public last month. That being said, their last private equity round was in 2015, so it's not exactly the type of company we're tracking here. All in all, that's not much, so I was wondering if we would need to see a bit more activity on that front in 2025 to keep investors attracted to water's call. I could have crafted an answer out of my little brain, but I thought it would bring you more value if I asked people who are really in the trenches. So I reached out to Tom Ferguson, the founder and managing partner of Burnt Island Ventures, and Clayton MacDougald, Emerald Technology Ventures investment director, which we've seen are two of the 3 most active water investors both last year alone and over the past 7 years combined, to grab their brains. So, is it concerning that 2024 only saw 3 exits out of all the companies that received an investment since 2018?
We don't rely on a specific number of exits happening every year to still be interested in water. We all understand the water industry. Sometimes it can work a little slower than other industries. We have a water fund. We're looking at a second water fund. We're going to continue down this path, right? We think that there's good opportunities in the water space from a return, from a build-up, from an acquisition perspective.
And indeed, when we see that 2024 saw a record-breaking water investment volume, as we discussed earlier, despite an otherwise challenging VC environment, it tends to prove Clayton right.
The amount of investment going into water now is over $1 billion, but still a very small percentage of overall clean tech, climate tech, whatever term you want to use. But I think the importance of water is only becoming more and more important and more evident.
It is a very helpful lagging indicator of the overall market's judgment of the quality of the arguments being put forward by people who are starting companies within water. You know, more people are making bets in water, and that can be only a good thing.
Sure, the water tech cheerleader in me agrees with both of them. But my role here is to be the party pooper, right? So aren't high investment volumes and tiny exit flow the early signs of a bubble?
I wouldn't say it's the early signs of a bubble. I would say it's the early signs of something very different. One of the things that I think it's most common for people to have trouble with is the idea that water is actually at the beginning of its S-curve. Water technology is at the beginning of its S-curve. And we are just at literally where the bottom of the S-curve is lifting off the X-axis.
We typically model 4 to 7 year exit period when we're doing an investment. When we talk about exits for our existing portfolio, we're not going to force or try to force an exit because of our modeling. It needs to make sense for company, the acquirer, certain milestones that need to be hit.
And indeed, this patience that's quite specific to a water-specialized VC doesn't just serve the economic purpose of the specific animal that the water sector is. Let's face it, it's also baked in those said VC's DNA.
The companies that we're marrying, so to speak, we're in it for the long haul, and we don't exit just because of a financial timeline or a financial model that we put forth 5 years ago. It needs to make sense, right? For the company and for us. We don't jump ship just to jump ship based on a timeline, right?
So now that we have that straight, what's moving in the market right now that may change the exit picture in the years to come?
Corporate understanding of their water footprint is really starting to increase. The water usage for food and beverage, for data centers, for those volunteering their data to the CDP, and that's becoming public now, is starting to click. And so you start having these global acquirers understanding their water footprint, starting to, dabble in maybe small or medium-sized acquisitions. From our perspective, it's a question of time.
If you look across like our portfolio, just the straight up numbers that you're seeing, like rates of pace of deployment, when you extend it out from where they are now, the performance that they've had in 2024 means that you really don't need a prayer meeting to hit those growth rates.
So when can we expect to see the exit raise increase?
We index to like 7 years at the beginning is the opening of our liquidity window. That's 2028. I think likely I'd be sort of more interested from 2026 onwards. You're looking at 2027, 2028 and beyond for that to be reflected in the numbers. And that's what it means to go through the S-curve. That's when water becomes much more obvious. And then my job changes, which is going to suck, but that's probably a different question.
Okay, so 2026 onwards, looking at 2027, 2028, does that mean 2025 will remain pretty calm?
If I was you and you were exit watching, there are a couple of assets in particular that I think are going to have a very, very, very healthy spin-off environment in 2025. When you combine that with people in water becoming far, far, far more effective, not only at telling water's story, but telling water's economic story. People at, New Mountain and Sun and KKR and, the EQT and CDC, these people are not stupid. Ember, another one from last year. They're really smart people, and they've already made fairly totemic bets within this market. And I think they're right, and I think they will be proved right. And when that does play out, it may not happen this year, but if it plays out in 2026 and 2027, though, I think you will get some pretty big news this year of assets being spun out, or at least sections of assets being sold off to alternative holders.
Now, being a successful VC is a job. It's not about sitting on your hands in waiting for your water asset to make you rich, taking your LPs along. There's some active work to do also on the exit end.
We try to keep warm relationships from our perspective on who might be potential acquirers for multiple of our portfolio companies. There's a variety of different companies interested in water.
This is not the beginnings of a bubble. It is the beginning of a realization that when you have a $1.4 trillion market that inexorably can only go one direction in the context of climate change, and you have now a totally different broad-based caliber of entrepreneurs who are starting to build vehicles of economic value, which is really what startups are. Like, we're just seeing the beginnings of that.
So if it's just a beginning, what can we expect on the investment end in 2025?
One of my out there predictions for this year is that I think it'll double again. I think we'll hit 2 billion this year.
Wow.
We'll see what happens.
I love his optimism. And I tell him that most of the time when I hang out with Tom as well. I would love to see it. I would.
While 2025 will tell us if Tom is right, I guess this all leads us to our seventh and last part, the survival timeline. Indeed, there's a reason why growth stage water companies raise money. Even if water is not AI or social media and you can't hyper-grow and buy your path to glory over billions of burn rates before even thinking of being profitable one day, you still hardly can't be cash positive from day one. And so, as Tom said it right,
the job of us and is to make sure that these companies have room to run.
So, room to run. But how long do they run? Well, since 2018, 508 companies raised growth stage money, of which 343 raised only one round. On average, a water tech company will raise 1.6 investment rounds, so you see that, indeed, a good portion need to run quite some time on that said round. On average, for the ones still living off this first round they raised, it's been 3.5 years that they're running. And then, if we look at the ones on a trajectory where they raise multiple rounds, the interval between those events is on average of 2 years. years. So you better protect your cash, watch your burn rate, and then look yourself confidently in the mirror because yes, water is coming and it's happening at all stages and sizes, from the startup and scale-up ecosystem we covered today to the consolidating and reshaping corporate world, which you'll find out if you click here. So subscribe to this channel to ensure you don't miss out on future pieces, and I'll see you next time.